And so we'll kick things off right now. I'll assume that you've had time to read through the risk warning at this stage. So here we are, May 8th. Big themes very much on course, although obviously the European election angle on things, as we basically alluded to last week, is just a little bit less of an issue now in markets than it was. And if you did watch our week ahead video, I did say that, well, you would expect a reaction in the euro and European stocks to be positive, but given the fact that it was so heavily priced in, good chance of a pullback. And that is actually what we're seeing at the moment. The euro popped up to 110 and now it's falling back. European stocks edged up, opened higher, and pretty much filled the gap straight away, and now slightly down on the day. French stocks actually down around if you look at the CAC, down about 0.8% as we talk about lunchtime here on Monday. So I don't think, this is game over for European stocks, but obviously that whole positive idea of political risk getting out of the way is sort of in the rearview mirror now. There are French parliamentary elections in a couple of months. There are German elections later in the year, so I'm sure that will come back into the fore again. But for the moment, now we're shifting back to thinking about earnings and central banks again. One thing you'll see in terms of this week, a big one, is the Bank of England. No one's expecting them to do anything. That's a pretty safe bet. Most of the time with the Bank of England, they've only changed policy once since cutting rates to such low levels to 0.5%. They cut it down obviously to 0.25% after Brexit, but otherwise every single meeting is complete write-off of boredom. So continuing that trend of doing little, but the big thing will be, how do they kind of put that across in terms of the minutes, how are they seeing the UK economy at the moment. Obviously, again, it's a bit of a kind of political risk idea with the pound as well. We've actually seen the economy soften slightly, although the data was good last week from services and manufacturing, yet the pound is rising because the general election should mean an easier time with Brexit. The other thing to mention, we've still got US earnings, a lot of earnings, quite a few earnings from the UK as well. One we'll be watching is Snapchat, or obviously Snap is the company, the owner of Snapchat, and I put a little preview of that on our website as well if you care to have a look on the research and analysis section. So, moving swiftly on. General format here for those who are unfamiliar is that I'll work my way through the major currencies, through the indices, and then through the most popular commodities, like gold and oil that we trade. If there's anything else you want me to discuss, just send a question through and I'll be happy to go through it. Okay, so starting off with the euro, which is generally where I start anyway, but obviously it is kind of center of the market attention at the moment. We basically have hit 110 and pulled back. So, anyone with a short order around that 110 mark, obviously loving life at the moment. We've dipped back down to the previous peak. So in a kind of characteristic uptrend, that's what you kind of see is a peak being made. You break the peak, you make a higher high, you drop back to the old peak where you find support. Resistance turns into support and the trend resumes. So we're in that kind of vicinity at the moment. It's been quite a dramatic drop from the high, 50 pips or so, in the context of recent momentum, quite high. But this is a potential buying area here if you have confidence that this trend is going to continue. And again, a sort of something I put into the week ahead video is I didn't elaborate on it too much, but basically this idea that if this triangle pattern is to be believed, then actually we're looking at getting up past the US election and up into the sort of 114s territory would be the kind of natural projection from this triangle pattern. So obviously we're not going to get up there in a straight line, and I think there's a good chance we pull back to the moving averages, but if you believe in the uptrend, you've got to pick your spots. We're having a bit of a dip at the moment. Obviously, it's just a matter of managing the risk. If the entries don't pan out, I think somewhere before we get back to the 50-day moving average, I would expect there to be another run higher past 110. So for the time being, if I just drop down to the shorter term chart, you can kind of see this opportunity a bit better. You know, there's the area of resistance. You could drop it down to here and sort of see where the market's reacting from there. If we can't close today below this level, you know, it might be a bit too late by the end of the day, depending on the strength of the rebound. But I would say that would be a good sign that this level's holding. Otherwise, you know, maybe you're tempted in towards the bottom of this kind of triangle pattern here. Might come in around the sort of 109 mark. But uptrend very much intact still, despite this pullback in the euro. You know, naturally there were going to be a few people. I hope none of you were one of them who bought in on the positive news. You know, what we're seeing is kind of pretty typical buy the rumor, sell the fact idea here with this French election. So let's move over to the British pound. Similar looking formation here. I haven't got it drawn in at the moment, but you can just slide it down here and you can see that we're also in a sort of triangle pattern breakout a bit further along when it comes to the British pound. So I think this, you know, this 127.50, 128 area is quite key support for the strength of this trend to continue. Whether it does so this week or not probably lies largely with the Bank of England. As we mentioned, there's probably not going to be much change. We would suspect still at this point that a lot of what the Bank of England says is going to be coloured by their general dovish stance towards Brexit. You know, they are convinced that eventually consumer spending is going to fall off a cliff because of higher inflation, and that's going to weigh on the broader economy, and as such they're probably not going to be in any risk to raise rates. The only reason to think they might would be if inflation really shoots higher, and that is their mandate, to actually stop price instability with much higher inflation. But in the past they've let it run up to 5% and not done much about it. So they've been taught, you know, they've used language like you know, they won't let inflation run too much above target, but I tend to think they probably would, so I don't think it's the Bank of England that's really a particularly positive force on the pound, only insofar as I think any more QE, any more rate cuts are off the table, and that in itself is just going to have to be enough for the Bank of England for now. So again, you know, we were in a range for a long time. This is a range breakout. Of course it can fail and pull back into the range, but you've got to go with the probabilities here, and my probability, given the fact that I never thought that the pound deserved to be at those levels in the first place, you know, it gives me extra confidence that this breakout does have some legs behind it. But again, keep this key sort of 127, 128 area in mind. If we could dip a lot through that, then obviously that's our kind of indication that the range, we're back into that kind of range area. Moving swiftly on to dollar yen, I have to say this is a pair that's kind of caught me out the most, and the way I approach the markets is that you know, to a large extent kind of missed out on this move up here. Just because the general tendency of this market has been a downward trend, and typically you get a better indication that the trend is reversing, i.e. you make a low, you know, you'd hope to see some sort of retest of the low where buyers take control and push higher, but this has just been a vertical push higher. So you know, anyone who's been buying into this move, obviously doing very nicely. It's been quite a decent trend, but I'm just still a bit skeptical. It almost has more of a characteristic of a sort of bear market rally, and I think there's a chance that I'm trying to see a example of something similar in the past where, or even just here where the moving averages were kind of lined bearishly. You got a kind of strong move up. Here we had those old highs to kind of support the idea. We got to push out above the moving averages, looked like the trend was moving higher, and then this market dived down again. So we could be getting another extreme version of that. You know, why is this happening? It's just you know, a bit more dollar strength, and if you want to play the fact that the Fed is likely to raise rates in June, it hasn't been very good to play it against the pound and the euro because of political reasons, but it has been good to play it against the yen because lower political risk has meant less need for buying a safe haven like the yen, and so naturally the dollar's been going up against the yen. So it's been, it's been a good sort of fundamental play on the fact that risk is being reduced and the Fed is likely to lift rates in June. The only trouble with this move might be down the road that the Fed have started talking about adjusting their balance sheet. Why does that matter? Well, just because they may only hike rates 2 more times this year and then start shrinking their balance sheet of all the bonds they bought instead of raising rates more, and so that would be actually a negative for the dollar. So moving over to indices here, for some reason my FTSE chart doesn't like to update, so it's not quite looking as I had it. But this is the key support we mentioned a few weekends ago. It's still holding. We put in a higher low. So the point is, we made it quite dramatically lower low. We held in a previous low, so obviously all these lows we dropped beneath it. First sign of a potential downtrend. But the thing is, equities have been moving so strongly that it's just, I was certainly hesitant about wanting to sell at this resistance here. Obviously you see it kind of held. There was the support. Held as resistance, but not for long. We didn't take and make out new lows because generally stock markets are pretty buoyant. So what we've ended up doing is making a higher low and now a higher high. So we're on that basis, and on the basis of these moving averages, in the fact that the price is above both, back into more like an uptrend territory. We're not above the previous record highs yet, and the moving averages are still kind of out of sync. So the short-term moving average is below the longer term, but obviously that is a lagging indicator. So once those turn higher, obviously the price will be much higher, but we'll have a bit more confirmation that the trend is back intact. So probably, out of all of them at the moment, because of the strength in the pound, the FTSE is one of the weaker markets. The Nasdaq has been making record highs, but the Dow has not. We made that strong push higher after this was the gap open after the French election. Made a strong gain the following day and haven't really done much since, and that's been despite what's expected to be double-digit earnings growth in the S&P 500, which is the best in a while. So big cap stocks not really performing too well in the US, but generally things still looking quite strong. I think maybe markets just waiting again for a bit more confirmation from Trump that some sort of decent tax deal is coming through. But again, it'd be very tricky to find spots to sell. It would be tempting up at the previous highs. If we got a strong, rejection of those old highs, maybe we get another turn lower. But generally, the trend is up. Here's the Germany 30. We're on a weekly chart here. This was the previous record high. So we're comfortably above that now, and you can see that was the old high there. We held it support and we rallied off last week before the French election, and now we're pulling back a bit. So pretty much in line with what's happening in the French stocks. And something will be interesting to watch moving forward is if we do continue to get this euro strength, that's typically a bad thing for German stocks because they're big exporters. So just like on the FTSE, there's a bit of a negative correlation between the pound and the FTSE. Same with the DAX and the euro. At the moment, the euro and the DAX are moving in the same direction because reduction in political risk is good for both. But eventually, it's going to be, well, hold on, the euro's looking pretty strong now. That's not good for foreign earnings at German companies, and that could then make the DAX a bit more of an underperformer. Now just looking at Brent, certainly one of the more interesting trades of the last couple of weeks. Obviously it's fallen off a cliff. now we've so we're sort of making lower highs, kind of a downtrend. We're making lower lows, so it's all looking, moving averages have turned negative. So it's all looking fairly bearish at the moment, but obviously we've had a pretty strong reversal off the lows as of last Friday. Obviously, I think what's generally happening here is, and, I mentioned it quite a few times in my end of day notes, that the positioning was record high longs in the futures market on oil. The hedge funds just went all in on higher prices after the OPEC cut, the OPEC output cut, and in a way there's just, when that many people are long, who's left to go short? The market just didn't really have any room to go higher. So what we're seeing is all those long positions getting flushed out. So it's kind of more of a positioning story than anything massively different fundamentally. The fact that US oil inventories have been stubbornly high is certainly not helped, but I think it will be difficult to get really short the market while the chance of OPEC extending the output cuts is still on the table. So I mentioned in the week ahead video that I think at some point, we're going to reach a sort of inflection point where the market sees value. It's been pretty choppy in general. I mean, we're in a general uptrend. So something I've noted is just, it's only confirmed with 2, but we tried to push through this rising trend line, failed, held above it last week. That's a positive sign. So it'll be a matter of whether we can get past through these previous significant levels on the top side. Got this fib. There was another level I wanted to highlight. I think we're around about the 76.8 on this rally, if I remember correctly. Thereabouts. Maybe it was from this low. But we pulled back a fair amount. We're still in a broad uptrend, but it's just choppy. So that's the point. So this is not necessarily an indication of a full market reversal at this point. So big bullish reversal pattern. The market's been very soft. You're kind of going against the trend if you are buying here, but there is a big pattern. This is more a matter of watching what happens on the short term. If we drop down to the 1 hour chart, just see what's happening at these levels. Are we sustaining breaks? We've had a little kind of gap and then dip below. It's going to be a bit of a battle to see if this actually does turn out to be the support. So no need to get too aggressive on the breakouts higher, because they're bound to kind of fail and offer better opportunities at some point down closer to that low. Lastly but not least, gold. I think it was gold actually. Maybe I was getting, when I was talking about the fib levels. Just don't know why this hasn't saved my. No. Anyway, you can sort of see where I'm coming from. That this the trend line and the 76.4 fib, quite a decent combination of support in this sort of area. So potentially we run into the bottom for gold. Again, obviously the reason gold is bouncing today is the opposite reason why why stocks are falling. It's there was a drop lower. The expected result happened in the French election, but now we're getting a bounce off the lows. So this has obviously been the pattern with gold: a big strong push higher, and then a sell-off, strong push higher, then a big hefty sell-off over a couple of weeks, and then rebounds. So there is certainly a possibility that happens again. We'll have to see how whether we get some confirmation from the lows here. But again, look at the end of this sell-off. You've got a pin bar reversal at what you think could be a bottom there, but then the market rolls over again. A small bullish candlestick here. You think maybe that's the beginning. You get a little false break. You do test the low again first before you eventually push. So just because we're positive today, not quite necessarily the bottoming goal, but a positive sign. So this, I should mention that most of these charts are a daily candlestick chart for those someone who's questioning that. Gap on the euro against the dollar. Let's flip back to that. Are you referring to today's open? Oh, I see. Yeah. Basically, the gap from a couple of weeks ago. Yeah. After the first round. Understood. Well, that filling in the gap would actually make a lot of sense in terms of coming back to test the 50-period moving average. I think there's a distinct possibility of that. You know, typically when you think of gaps, there's a couple of different kind of types of gaps that take place. Potentially, this last gap that we saw today was the exhaustion gap before the market gets exhausted and comes back. So, you know, if that is the case, you know, maybe there's some room to the downside. You know, I think probably by the time the market could get down here, even here, you know, that would be making sense for these moving averages in terms of the market kind of finding more buyers lower down. What would drive that? You know, it's really probably got to come from the dollar side of things. The Fed's statement wasn't, you know, it was quite hawkish in that they mentioned the having a complete they mentioned the first quarter growth was quite soft, and they just said specifically that it was transitory. So that was kind of mentioning the weak data and just saying basically we're going to ignore that was quite surprisingly hawkish. But if we get the Fed speakers coming out over the next couple of weeks really talking up the chance of a June hike, then that would probably be what can get the price down here. But it's hard to really see from the euro side of things. You know, obviously where we are at the moment is trying to break out of a sustained range. You know, this obviously is a potentially massive move in the market. Is what we're angling for. We're kind of hoping for something like this to happen. You know, market to explode into a nice uptrend. But obviously there's a bit of toing and playing before that happens, and you know, coming down and filling this gap would obviously wash out a lot of the kind of weak longs in the market. So the way the way I'm thinking about it is, well, assuming the market's going to continue its breakout. If it doesn't, then you kind of reconsider your options when we get back down to the gap. But do I know if it's going to fill it or not? I wish I did. So last ones, someone was asking a pound against the Aussie. Let me just bring that up then. Also got the RBNZ meeting this week. So I guess, you know, when you're talking about this particular pair, you know, again, it's the pound breaking out of a, you know, after a big drop, it's breaking out of a downward, out of a range. And again, my assumption is that this breakout's going to continue, but we have had quite a solid move off the lows without much pullback from the top of the range. So, you know, some deeper correction is certainly possible. I'm trying to think sort of catalysts for it. You know, probably you know, it's got to be one of the two central banks. Bank of England, you know, certainly wouldn't surprise me if they again talk down the economy a bit, and that sends the pound lower, gives you another opportunity at lower prices to gain on this potential break out of the range to the top side. Obviously this is the kind of first layer. You know, I'd certainly be pretty cautious about the next potential layer of resistance right here from those old areas of resistance. Once you're up above those, you know, then I think there's not, you know, look at this gap down, you know, the Brexit drop obviously. There's not too much in the way of support on the drop, hence there's not going to be too much resistance on the top side. So if all this Brexit fear unravels, and this pretty much applies to all these pound pairs, you know, some pretty good trading to be on. You know, it was really going to be an example of let the profits run, cut the losses short. You know, there could be a really good sustained uptrend because people have been so negative on the pound, and positioning. You look at the CFTC data, still pretty short the pound. So people getting kind of washed out here in the pound, but you know, people still stubbornly negative on Brexit. At some point they're going to have to give up, a bit like what's happening in oil at the moment. So yeah, I think we're going to call it a day there. So it's yeah, went slightly over with the questions at the end. So we're about 1 o'clock on Monday lunchtime. Thank you very much for attending, everyone. Really glad to have you here. I will be doing the same one again next week. You can use the same link that you used this week to re-register for all the upcoming following webinars. So thanks again for attending. Good luck with trading this week. Jasper signing out.